Crude oil dips as OPEC plus signals supply surge amid easing geopolitical tension. Global oil markets witnessed a swift downturn in prices on Friday following reports that OPEC plus alliance is set to escalate its crude output in August, a move that underscores the coalition's strategic pivot in response to cooling geopolitical tension and evolving market fundamentals. According to four senior delegates within the OPEC plus framework, which includes both the organization to the Petroleum Exporting Countries and its non-OPEC allies, the group is preparing to raise production by approximately 411,000 barrels per day in August. This decision builds upon a similar output increase already scheduled for July. The mere suggestions of this supply augmentation sent immediate ripples to the market. Brent crude futures, which had been inching upward earlier in the day, reversed course and fell $0.25 to $67.48 per barrel by 16:15 GMT. US West Texas Intermediate crude oil so slid by $0.20, landing at $65.04 per barrel. The report about OPEC increase came out and prices cratered, noted Phil Flynn, senior market analyst at Price Futures Group, highlighting the market's acute sensitivity to supply news in a post-crisis context. The recent price movements marks a sharp departure from the war-fueled volatility seen just weeks earlier. During a brief intense 12-day military confrontation that erupted after Israel targeted Iranian nuclear sites on June 13, Brent surged past $80 per barrel, but that rally proved short-lived. With US President Donald Trump brokering a surprise ceasefire, the geopolitical risk premium that had inflated prices swiftly dissipated. The market has almost entirely shrugged off the geopolitical risk premiums from almost a week ago, remarked Janiv Shah, an analyst at Rystad Energy. We have returned to a fundamentals-driven market. The next major inflection point lies on the horizon. OPEC Plus is scheduled to meet on July 6, where a formal announcement on further production increases is expected. Industry watchers believe the cartel's strategy reflects confidence in a recovering demand landscape, particularly with global travel and industrial activity rebounding during the summer months. Flynn, echoing broader market sentiment, said we are getting a demand premium on oil, a nod to expectation that surging consumption could offset the impact of additional supply. Earlier in the day, oil prices were supported by bullish inventory data. The U.S. Energy Information Administration reported a notable drop in crude and fuel inventories, driven by rising refinery activity and domestic consumption. In Europe, gas oil stocks at the Amsterdam, Rotterdam, Antwerp have dipped to their lowest level of over a year. A similar drag down occurred in Singapore, where middle distillate inventories declined as net exports climbed over week.